Well, let's just start with where the Kenyan market is right now, just in terms of developing those merchants, whether it is ready to do that at this stage.
Well, traditionally Kenya has been known as a player only in the downstream and midstream markets. By this I mean in the areas of refining and transportation, like pipelines, which constitutes the midstream. But a huge challenge has come because for now we've discovered some quantities of oil in northern Kenya. And ideally what's happening is that the local merchants, and in fact the government as a whole, is not prepared technically to deal with this. So a lot of investment and interest will be coming from outside Kenya. So for now, I would say we need to look at probably borrowing a leaf from our neighbors in Nigeria, and coming up with a sort of a petroleum industry bill which can govern the oil industry centrally and not have the oil industry being regulated by different, let's say, agencies that are not interconnected. One of the things we can look at is introducing a clause where you have local content, so that any job that can be done locally will be restricted to only local players.
Well, if that were to happen, though, is there some kind of a threat that if you had this containment, that those people that are producing would then be able to charge whatever it is they wanted to charge because you can only buy locally?
Well, ideally, the idea is to sort of create competition locally. And for this, probably the government has to come up with policies where we look at development of expertise locally. Because one thing that there is there's a very critical shortage of expertise in this part of the world. Traditionally in Africa, oil and gas has been explored mostly in West Africa, but there's a lot of interest coming in East Africa because of the gas finds that you have in Mozambique, Tanzania, and now possibly all the way up to Somalia. So the idea would be, first of all, we need to have sort of like partnerships where these global companies have local operations or local partners who they can train and bring up to the level where they have this kind of expertise, and sort of have a lot of competition within this sector.
Matthew, what I wanted to find out from you is there had been talk of Kenya's refinery becoming a merchant refinery. Has that happened? Where is that process right now?
Well, recently, okay, as per last month, the bill had been passed through government, and officially there should be a merchant refinery right now. But of course, the process will take much longer. One thing that they are doing is that they're investing $1 billion to upgrade the refinery from the very simple refinery that it is to a more complex refinery to be able to, let's say, process the heavy oil that they produce to more light ends. Because as you know, what happens in the oil and gas industry, there's a higher market value for the light ends, things like petrol or gasoline and kerosene. So these usually cost more than the crude that you're buying. But for the heavy oils, what happens is that they cost less in the marketplace than even the crude that you're buying to produce them. So once this upgrade has been done, then probably you will see them going in to become a merchant refinery where they'll be importing crude and then selling it at the best prices to different markets.
What are oil marketers saying right now? Because there had been some criticism from some of the marketers. How are they responding to this move?
Well, I'd say for now it's a big threat for them, because traditionally they've been involved in both the importing of crude so that it is refined for them by KPRL, our local refinery, and then also the retail. So you can see they're involved in both parts. But of course, there was a huge criticism of the refinery because of its inefficiencies, where they had to, actually part of the crude that they imported had to be refined by the local refinery. But for now, they'll be free to buy crude products from any market, especially from the Middle East. Our local refinery will have to compete with these foreign refineries to provide the best pricing. So for them, I think they'll be happy in terms of margins. For the local market, they'll be able to get the cheapest crude without any restrictions from the government on where they should source it.
Matthew, I want to find this out from you. The refinery had requested, and this was even before the bill had been passed, when it was still in the proposal state, the refinery had requested that its revenues be protected by adding a fee on refined products. Did it get that?
Well, I can't really comment on that right now, but yeah.
Okay, Matthew, thank you so much for joining us.